Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to answer a question that one of our viewers had. They were asking if I could please do a video on the best places to form an international company for residents of UK. Now, this is probably particularly useful because of the fact that UK just announced that they're raising their corporate tax rate by 6%, which constitutes, more than 25, it's about 30% increase in the overall tax rate. So that's not good, right? And UK has a particularly useful set of rules where basically you can have a foreign company that is owned by a domestic company and you can repatriate those dividends tax-free. Okay, so in other words, well, I'll explain it to you as we go along. I'm also going to go through kind of what are the problem areas. There's like two major areas that are kind of challenging in the case of UK residents, so these are going to be important. And then I'll go through kind of based on that, some of the things that you might want to look at, some of the pieces you may want to consider when setting up a company abroad as a UK resident or citizen. Before we do that, if you haven't already, please hit the subscribe button, hit the notification bell. Really appreciate your support. If you liked the video, please give it a thumbs up. If not, please tell me why. Would appreciate that. And if you're interested in help with international structuring, where to go, how to get set up, what residency permits are good, what citizenships, and help implementing those things, please reach out to me. You can book a call, clarity.fm/Michael Rosmer. You can check out our websites, offshorecitizen.net, offshorecapitalist.com, and you can send us a message. All the links are below in the description. Okay, so the two biggest problems if you are a resident of UK and you're setting up a company abroad are, number one, the corporate residency rules. These are related to the management and control standards. So in other words, the way that it works in UK is by default, if a company is registered in UK, it's tax resident in UK. Now, tax treaties can override that, but by default, that's the starting point. But then also, if they're managed and controlled from UK, then they're tax resident in UK. And we have like 100 years of case law on this. I think actually the first case where they talked about this subject was the late 1800s. I want to say like 1878, but certainly around the early 1900s, there was a bunch of different cases on this subject related to companies in South Africa, in India, specifically there's a case in Calcutta, and a few others that pertained to a foreign company being tax resident in UK, even though it had the substance abroad. Okay, so that's the thing, I think, kind of one of the main lessons here in this video is there's a difference between, hey, I have substance abroad and I have management and control abroad. You can have substance abroad without having management control abroad, or vice versa, okay? So, how does this work? I've got some other videos on management and control. You can go and check that out. It's pretty detailed, which you can go through in terms of the UK rules. Unfortunately, it's not it's not like the statutory residency test where there's an easy flow chart to say, hey, where is this company managed and controlled? But it's something that's really, really worth considering. Okay, so that's the first set of rules we need to be aware of. The second set of rules we need to be aware of are the controlled foreign companies rules. UK is really good if you're a small business. If you have a foreign company that would normally be a controlled foreign company, but it's under a certain revenue or profit threshold, then you're good. So that's typically £50,000 a year for passive income or $500,000 a year for active income. So if you're in that threshold, great, you're good. If you're not, well, then it becomes a little bit more of an issue. So that's something that we pay quite a bit of attention to as we look at these different situations, is to say, okay, like how do we avoid that? Now, quick synopsis, if a foreign company is a controlled foreign company, so first of all, the UK threshold is lower than a lot of places. A lot of places are greater than 50%. UK is 25% or greater, okay? So that means that you'd have to be at 24.999% maximum in order to not be a controlled foreign company. So why is this relevant? In some jurisdictions, what we can say is, oh, you have a foreign partner, you're each 50%, that doesn't exceed the 50% threshold, so you're not a controlled foreign company. It's easy, right? In the case of UK, not so easy because, you could have a foreign partner, and unless, they or, maybe it could be multiple, are having over 75%, then, it can be a consequence for you. And basically what happens under the CFC rules in UK is they tax the company or your share of the company like a UK company and apply personal tax accordingly. So That's not great, okay? Unfortunately, tax treaties don't override that, so we're gonna go into this. Now, I did a video previously on Canada where we talked about, where was the best place for Canadians to set up, and part of the thing that I discussed was the residency rules. Now, if you go through UK's tax treaties, they have a pretty extensive tax treaty network, but those rules don't override the residency rules. So what does this mean? This means we have to pay special attention to what do we do in terms of the corporate residency management and control side of things from a UK standpoint, okay? Now, if you're traveling in order to actually manage the company, etc., great. There's actually been some recent case law specifically talking about cases where you would attend telemeetings or something for the board of directors meetings and stuff like this. And they're relatively favorable. It's not too bad. But that being said, it's an issue. Now, so let's talk about where this becomes important. Let's say that you decided to set up a company in Cyprus, okay? So we normally like Cyprus in a bunch of different regards. Namely, we like having non-resident companies in Cyprus. If you have a resident company, you're paying 12.5% tax, which, if you're trying to go from your existing country to there, is the differential worth it? I mean, you need more scale to justify that differential, right? Now, if you have your management and control in Cyprus, then it's a Cyprus resident company. So maybe you escaped the UK, but you went down to 12.5%. Is that great? It's not ideal, right? So for this reason, some of the places that I tend to prefer, well, there's two sides to this. The one is you could have, say, a Cyprus company without having the management and control in Cyprus, okay? That's one way that you could do it, okay? The other way that you could do it is you could have a company in some place like UAE, where I am today. Okay, so I think that for residents of UK, UAE can be a pretty attractive place to form a company. That's one thing that is pretty worthwhile. Another place that could be good, again, is Cyprus or Hungary. I think these are two both interesting ones if you don't have the management and control in either of those places. This begs the question, where would you have the management and control? I would typically say Malta in those situations. So if you were to have a Cyprus company managed and controlled from Malta or a Hungarian company managed and controlled from Malta, that would be an option. The other places that are, of course, very popular for UK residents are the Channel Islands or Isle of Man. And what's the deal with them? The deal with them is that you have local fiduciaries that are pretty sophisticated, that are very much, their objective is to be whiter than white, and they're going to provide the management and control locally. Pros and cons of this. The con of it is, okay, you're in a situation where that could interrupt your operational flow and efficiency. Okay, so that's something you need to be a little bit aware of. On the flip side, the pro of it is you actually have somebody there who's going to provide the documentation and the support, etc., to ensure that you meet those standards, which is pretty useful. Okay, I would say banking there is possible and at good quality, but not super easy. Okay, so even with fiduciaries today, dealing with banks in places like Isle of Man, places like Jersey, Guernsey, is so-so, okay? If you're in UAE, what we like about it, I mean, you can have the local banks, relatively easy to bank. If you're in some place like Cyprus or Hungary, Hungary is the easier of those two in terms of banking, because you could have local Hungarian banking as well as around the EU, whereas if you were in Cyprus, you would have just around the EU, you typically wouldn't bank in Cyprus. So that's some factor there. This brings us to the controlled foreign companies rules. So again, as I said, if you can meet one of the exemptions, and I just mentioned two of them, there's a few others. If you can meet some of those exceptions, then you're good. If you can't meet those exceptions, then you need to look at alternative solutions, okay? Trusts are one option, although trust rules in UK are fairly complicated. So that's one way to go. Another way to go is to say, okay, great, we're going to have, maybe you're a smaller partner of a larger company, right? So there's a few different people. Okay, that's another option. Or in that particular case, you might say, hey, listen, I may want to shift my residency. So anyway, any of those are interesting options. It's very much case by case. It depends a lot. I guess I could kind of bring to some of the other places that you could look. You could look to Hong Kong. Again, banking is a little bit tougher. in that case, but sometimes still workable. It used to be that Labuan was okay. Yeah, those would be kind of the places that I would typically look as a resident of UK. As I said, case by case, take a look. If you're in the situation where you're interested in doing this, let me know. You can reach out. Again, clarity.fm/Michael Rosmer, link in the description below. You can book a call. Check out our websites, offshorecitizen.net, offshorecapitalist.com. It's very important on those two things, the management control and the controlled foreign companies rules, that you get those right. Otherwise, you can cause yourself a bunch of issues. So anyway, hope that helps. Look forward to seeing you guys on the next video. Give it a thumbs up if you like it, share it with your friends, and I'm going to see you guys very soon.